Hey, what's up, guys? Welcome back to another video. And today I'm going to be going over top-down analysis from a smart money and price action perspective. And let's get into this. Okay. So, what exactly is top-down analysis and how does it actually work? So, top-down analysis is a type of trading strategy that involves analyzing market structure from the higher time frame level down to the lower time frame level. The name itself is self-explanatory, just like top-down analysis. So how does top-down analysis work? Now, unlike other strategies, you have to use multiple time frames in order to have a complete perspective of market structure. Now, this is a 1 to 80 risk-to-reward ratio trade setup. Now, how was I able to get into this trade just using only top-down analysis? In order to understand this, we would have to go onto the 1 month time frame. But before we go on to the 1 month time frame, let me just delete all this real quick. Okay. Now let's go on to the 1 month time frame. Okay, now we are currently on the 1 month time frame. Now, by the way, this is TBP USD. Okay, so what can we see just based on pure price action? So you can see price, has came all the way down. Now price is on a bullish momentum. So on the 1 month time frame, we know price is on a bullish momentum. So as you can see, price from this low right here went all the way up, retraced a little bit, came down, went up, came down, went up, came down, and is currently trading inside a range, right? Now this area right here, is where I go into the trade. So how exactly did I know that price was going to go all the way down? So first off, I knew price was going to go all the way down just because of this candle right here. So this low right here is a liquidity. Now there are a lot of examples of liquidity, but this is just one of the types of liquidity I use to get into a trade. So how does it work? It's very simple. Now let's say price has been coming all the way down. Let's say price is on a bullish momentum. Now, all of a sudden, there's a break in market structure, right? So, price is now in a reversal. So, price will start to go up. So, price retraces all the way down, price goes up, and you can see price, okay? Let's take this right here. So, this is a break in market structure. So, whenever price does not break any structure on the far left side, this low automatically becomes a liquidity. So, it's that simple. So, you can see this right here. Price came all the way down, price went up, and this was a break in market structure. Price came down, went up, but did not break any structure on the far left side. So this automatically will become a liquidity. So most times price do go down below this low, to tap out the buyers and continue the bullish momentum. So it's that simple. Now let's go back to our chart real quick. Okay. Let's just delete all this right here. Okay. So as you can see, price retested this other block right here. So price, has been coming all the way up, right? Came down, went up, came down, went up, but did not break this high right here. So this was inside a range. So price went up, came down, went up, and came all the way down below this low right here. So as you can see, this did not break any structure on the far side. So there was no break in market structure. So as you can see right here, let me just delete this right here so you can have a better view. So you can see this was a break in market structure, right? Price went above this high. This was a break in market structure. So price went above this high as well, right? So this was a break in market structure, but there was no break in market structure right here. So this low automatically became a liquidity. And we also have another example, right? Let's check this example. So this right here is a candle, right? So as you can see, price did not break any structure on the far left side. So this automatically became a liquidity. So as you can see, price came below this candle. So price retested this other block. So there are two reasons price came all the way down to this other block. One is because this other block was responsible for breaking this structure right here. Number two is because this candle right here was a liquidity. Why? Because it did not break any structure on the far left side. So price came below this candle and retested this other block and went all the way up. So immediately price goes all the way up, and hit this high. So price has to come all the way down. So it's just like supply and demand. Now in price action, price doesn't just go on a straight line, right? If price just goes all the way like this, everybody will become a millionaire. So price doesn't just go on a straight line. So price has to have a supply and demand zone. So price have to go up, come down, go up, come down, go up, come down, and go. So this is how price actually works. So there has to be an expansion and a retracement, an expansion and a retracement. So price doesn't just go on a straight line. So what is all this about? Now let's go back to our chart. So immediately price from this low breaks this high right here. So I knew price was going to go all the way down. So essentially, if price was going to go all the way down, price has to tap this liquidity right here. So the low of this candle right here was my TP. Okay. Now, obviously, it's not wise, to enter using the 1 month time frame because every single candle right here represents 1 month worth of trading data. So you can't find a trade setup on the 1 month time frame. You only use the 1 month time frame to get your bias. So in order to find a trade setup, you have to go to lower time frames. So now we have a bias. So we know price is going to come down and price will come down below this low right here. So all we have to do is look for a break in market structure in this region right here. So now let's go down to the weekly time frame. Okay, so on the weekly time frame, there isn't actually a lot of structures. So let's just go down to the daily time frame. Okay, so on the daily time frame, let's try to highlight every single low right here. So price from this low right here went up, right? So price came down, went up, came down, went up, came down, went up, came down, went up, and has been coming all the way down. So basically, to get into this trade, we have to look for a break in market structure. And this is a perfect example of break in market structure. So as you can see, this low right here was broken by this other block. Okay. Now this is a daily time frame. So now it's possible to get into this trade just by refining down to the lower time frame, right? So this is going to be your TP right here. Now let's set our position. So if you're going to enter into this trade on the 1 day time frame, you're going to have about 1 to 11 risk to reward ratio. But the thing about top-down analysis is that you can get better. You can refine down to the lowest of the lowest time frame in order to increase your risk to reward ratio. Now, this is not enough. So we'd have to go down to a lower time frame. So let's go down to the 4-hour time frame. Okay. So on the 4-hour time frame, we can start to see more structures. So price came all the way down. There was an impulse move down to break this low right here. So we have this other block right here. So inside, this is the 1 day order block. So inside of this 1 day order block, we have this very small order block level. So all you have to do is to refine your entry down to this order block right here. So it's very simple. So this is a fair value gap, right? So price will close this fair value gap and definitely tap into this order block. So now let's refine our trade setup. So on the daily time frame, we add about 1 to 11 risk to reward ratio. So now let's see what we have now. Okay. So you can see our risk to reward ratio has now increased from 1 to 11 to 1 to 47 risk to reward ratio. Now let's go down to a lower time frame to see if we can increase our risk to reward ratio. Let's go down to the 1-hour time frame. Okay. So on the 1-hour time frame, let's try to see if we can reduce this right here. Okay. Let's have a closer look. So we have this fair value gap right here. So no price will fill this fair value gap. Okay. Now let's reduce this up onto this right here. Let's take this down. Okay. Now let's try to refine our trade setup. Okay. Now let's see how many risk to reward ratio we have. Okay, now this is about 1 to 80 risk to reward ratio. Now you can see it's very simple. It's very simple. I didn't actually, use any pattern. So as you can see, it's very, very, very simple. just based on pure price action, right? Let's go on to the 4-hour time frame. Just based on pure price action, you can actually find very perfect setup. You don't have to use patterns. You don't have to make things complicated. All you need to do is just to understand price action. So you just need to know where price is going. You just need to implement the market structure. You just need to use liquidity. You need to use order block. Just simple concepts. You don't have to go, to pattern just like how the retail traders do. You don't have to use all this right here. You don't need all this right here. So all you need is just price actions in order to do a top-down analysis. So it's very simple. So as you can see, all it took was a little over like 5 to 10 minutes just to get this kind of massive setup. So whenever you go onto your charts, you don't just enter into only just one single time frame and start to look for a trade setup. You have to use multiple time frames. You have to do a top-down analysis. So you have to go first onto the higher time frames, to get your bias, right? And then once you see a trade setup on the higher time frame, you can now refine using the smaller time frame. So it's that simple. Now this is going to be the end of the video. If you have any question at all, you can ask in the comment and I'll be sure to reply. And if you haven't subscribed, make sure to subscribe and turn on notification so you can always be notified every time I upload another video just like this. Thanks for watching this video and see you in the next one.